Look at the dollar bill in your pocket, or the digital balance in your banking app. We like to think of that money as ours. A reward for our time, a static prize sitting in a vault. But money is never actually sitting still. If it stops moving, it dies. And the truth is, your money isn't really yours. You're just a temporary stop on a much longer, much weirder journey. Think of the global economy as a giant, interconnected plumbing system. There are trillions of gallons of liquidity rushing through pipes, into tanks, and out of faucets every single second. Most of us are just standing at the end of a small kitchen sink, trying to catch a few drops in a cup. But to understand why your cup feels empty or why the price of your milk just doubled, we have to look at the great pumps. The journey starts at the central banks. These are the master plumbers. They don't just print money like a literal printing press anymore. They click a button on a screen and create credits. They hand these credits to the big commercial banks, the massive reservoirs. Now, the big banks don't just hold on to this water. They have to move it to make a profit, so they open the valves. They lower interest rates, making the pipes wider. Money rushes out into the world as loans for houses, startups, and credit cards. When the flow is heavy, everyone feels rich. The stickman building a house gets a loan. The stickman starting a coffee shop hires 5 friends. The water is everywhere. But here's the catch. This isn't fresh water, it's debt. Almost every dollar circulating in the world today was born as a promise to pay it back with interest. That means the global flow is actually a race. We have to keep moving, keep working, and keep selling things just to stay ahead of the interest that is constantly evaporating the water in our cups. As this money flows from the big banks, it hits the markets. This is where the flow gets chaotic. Money doesn't move in a straight line. It seeks the path of least resistance. It looks for yield. If the plumbing in the US is rusty and slow, the money flows to tech companies in Silicon Valley. If those get too expensive, it rushes across the ocean to emerging markets in Asia or South America. It flows toward wherever it can grow the fastest. It's a mindless, hungry liquid. It doesn't care about the people in the houses or the workers in the shops. It only cares about the return. But sometimes the pipes get clogged. This happens when we all start to get nervous. We stop spending. We stop borrowing. We tighten our grip on our cups. When the flow slows down, the whole system starts to groan. This is a recession. The master plumbers, the central banks, see the pressure dropping and they panic. They open the valves even wider. They pump in more digital credits. They try to force the water to move again. But there is a side effect to pumping too much water into the same system. Inflation. When there is too much money chasing the same amount of stuff, the same houses, the same food, the same energy, the money itself starts to lose its power. The water becomes diluted. Your cup is still full, but it no longer quenches your thirst. You need 2 cups now to get what 1 cup used to provide. This creates a strange paradox. To save the system, the plumbers have to make your life harder. They start closing the valves. They raise interest rates. They make it harder to get a loan. They intentionally try to slow the flow down to stop the dilution. They want you to spend less. They want the economy to cool off. It's a constant, violent cycle of flooding and drought. We spend our lives chasing these drops, building our own little dams and reservoirs, hoping we've saved enough to last. We focus on our salaries and our savings accounts, but we rarely look up at the pipes. We rarely ask who is turning the valves or why the system was designed to require a constant, frantic flow just to keep from collapsing. Most people believe they are playing a game of accumulation. They think the goal is to get as much money as possible and hold it. But in a system built on debt and shifting valves, you aren't really a collector. You are a conduit. The money entered your life from somewhere else, and it is already planning its exit. It's moving toward a landlord, a grocery store, a tax collector, or a bank. It's a guest that never intends to stay. So if the money is always moving, and the value of that money is being changed by people you'll never meet, in rooms you'll never enter, who is actually in control of the wealth you think you own?